Hi everybody, Scott Bauer here from Prosper Trading Academy, and I want to talk about a couple technical indicators that most traders will take a look at whether they use them on an everyday basis or not. And those are support and resistance. And let me just preface this by saying that there are literally thousands upon thousands of indicators out there, both technical and fundamental, and there is no one holy grail out there, everybody. If anybody ever tries to tell you that they have the latest and greatest or the best technical indicator that's going to tell you where a stock is going to go with certainty, you should run as fast as you can. However, there certainly are these indicators here that have been very successful using prior data, historical data, to help us predict what may happen in the future. And support and resistance areas are two of those. But what are support and resistance? Well, support is an area that we can look at, whether it's an individual stock or a commodity or even an option, or quite frankly, volatility areas where we can look at where buyers come into the marketplace. Doesn't mean that that stock per se is going to rally or go higher from there, but what support means is there's enough buyers coming in that perhaps that stock or whatever it is we're looking at doesn't go lower. And that is all based on data that has happened in the past, again, to help us predict what may happen in the future. It is very, very viable to look at, but when you're looking at support, and I'm going to go into resistance here in a moment here, just keep in mind, folks, that when you're looking at any of these technical indicators, you actually want to look at a few at a time and not just rely on any one. Now, resistance, that's really the flip side of what I just talked about with support. Resistance is an area, again, whether it's a stock or an option or an ETF, whatever it may be, where sellers are coming into the marketplace. So kind of like there would be a ceiling in a stock, if you will. It does not mean necessarily that that stock or commodity, whatever it is going to go down from there. But what it is an area that in the past, historically, sellers have come in there and prevented that stock from moving higher. Right now, we're going to focus in on just a chart that I look at to really look at how support is defined and how that can help us make a decision in our everyday trading. So again, as a quick review, support is an area in a stock, an index, commodity, whatever it is, where buyers come into the marketplace. Now, how do we know that? Well, this is historical data. This is what has happened in the past. Does not mean that a stock, ETF, commodity, whatever it is we're looking at, is necessarily going to bounce or rally from that point, but support is really used almost as like a floor. If you can imagine a floor and something not breaking through that floor, that's really what we're looking at support. So check out this chart that I have on the screen, which happens to be an ETF. It's the IWM, which is the ETF for the Russell 2000. Okay, and I have a chart up here. Basically, it's for 1 year here, going back to October of 2020 all the way up to right now. And you can see this blue line here, okay? This blue line is an indicator that I use, which is the 200-day moving average. And as I've mentioned before, there are plenty. I mean, when I say plenty, we're talking thousands of different indicators that we use, that people use. And there is no one indicator that is ever the holy grail. There is no one indicator that will absolutely determine where a stock is going to go with 100% certainty. But what we want to do is use those indicators, use that technical analysis to help us make the most informed decision that we can based on what's happened in the past. The 200-day moving average is one of those indicators that I like to use in conjunction with others. So if we look at this chart in IWM here, again, last October all the way down here at 142, rallying up to where we are right now at around 215, you can see along the way over the last year, some ups and downs and ups and downs and ups and downs. But if we start all the way back here, last October, where did that line start at? Where did we see that candle holding support and not going lower than that? Right there at this blue line, which is the 200-day moving average. Now, like much of the rest of the market here over the last, year or so, we had a pretty solid move up with not much pullback at all. However, if we look here in IWM right here, so this was, what day is this here? This is around the end of July. We can see this thing coming right down to that 200-day moving average and not dipping below. Little bit of rally off of that. Came back down again here on August 19th-ish. And I'll circle that right here. And again, you can see that support. Okay, it did break through for a couple of ticks or so, and there's no support or resistance area that you're ever going to see that is true to the absolute tick, true to the absolute penny that you're looking at. We're looking at a general area, okay, and you can see that right here. Okay, so when we saw IWM come down to this area right here, that was a very bullish indicator for us. In fact, and I'm looking right here to get the exact signal that we sent out. So on the 19th, actually on that day, we sent out a signal to buy an upside bullish call butterfly. And we got that, that move. We got that move. Again, the support doesn't necessarily mean we're going to see a big rally up, but in this case, we did. And just within a matter of a couple days here, we took some partial profits out on our upside bullish call butterfly, rallied even a bit more, and we took entire profits out, and we start over. Okay? Remember, bulls and bears prosper. Pigs go to the slaughter. What does that mean? It means you never ever, at least in my case, my entire trading career, I never go out there trying to hit a home run. I want to just be the best bunter on the team. I want to continuously get up to bat and hit singles, get on base. Okay? When you swing for the fences, when you go to hit that home run, you're going to strike out more often than not. So that's why we took those profits. Now, is there another opportunity setting up here? You bet. We see IWM trading just right back down to that 200-day moving average here, which, based on prior historical data, is support. Does that mean that we necessarily want to take an upside position, a bullish position? Maybe, but we may also look to sell a put or sell some put spreads here, which is what we do. We trade ideally with a spread to cap out our risk. We do that here if we were to sell a put spread with the idea that that support level is going to hold and the stock, or in this case the IWM ETF, is not going to go any lower. So this is just one example of how support works. And next on, we're going to look at the opposite of that, basically flip it on its head and look at something we did, looking at areas of resistance where a stock maybe came up to a ceiling instead of what we're seeing right here as support. Let's take a look at a position that we actually did here based on resistance. Resistance meaning that when a stock would trade up to a certain area, it would act as like a ceiling, and we would, then see the pattern or the history of the stock moving down from there. And one thing to keep in mind, both with support and resistance levels, if you're going to use those as a technical indicator, those are levels of what's happened in the past. So that's historical data to help us predict what may happen in the future. They are very powerful indicators, both support and resistance. I always like to couple them with something else I'm looking at. But let me show you something here. This happens to be in Zillow. So what you're going to see here, you see three lines. This blue line here is the 200-day moving average. That doesn't really come into play on this signal. This red line is the 50-day moving average, and then this kind of lighter green line is the 20-day moving average. So if we go back in time here and kind of look at this resistance, these areas that I'm looking at right here, okay, you can see, what is this? 1, 2, 3, 4, 5, 6, 7 times over basically a 6-month period here where Zillow hit either the 50-day moving average or this lighter green line, the 20-day moving average, and it acted as a ceiling. So right when it sold off here again and it came back up to this level right here, that's where we jumped on this. Okay, that's where we jumped on this signal because, again, past performance, it's showing us what may happen. I'm going to make this bigger now so you can see what actually happened here. We got into this signal right here, and look what happened to the stock. I'm going to show you right now exactly what we did. This was the signal that we put out here, guys. Okay, just to buy a diagonal put spread. A diagonal is very similar to a calendar where we're buying time, but a diagonal uses different strikes. But you can see that this is a bearish spread because in this spread here, we're actually buying the 87.85 put spread and just using 2 different expirations. Okay, so we did that for $1.55. And again, to look at the chart here, we did that right here, right as the stock hit right up to that 20-day moving average. And you can see what it did. Now, one other thing I want to point out to you here, okay? Look at this pattern. If I were to kind of draw this line here, look at this pattern of lower lows and lower highs, okay? So every time the stock would go down, it would make a lower low. So we start here, go down to here, here, and now we're right here. So this to me tells me this may be a good area to exit out, or at least partially exit out of our position, which we did. We were in this for $1.55 and we just took some partial profits at $2.75. So I'm hoping this makes sense to you. Again, support resistance levels, really good to look at to give us an indication of what may happen in the future based on what's happened in the past. Keep in mind, folks, that there is no indicator out there. There is no holy grail that's going to tell you exactly where a stock's going to move. It does not exist. If anybody tells you that it does, you should run as fast as you can. We just try and use indicators that we believe have the historical data that will work the majority of the time. Support and resistance are great ones. Here's an example of resistance. Again, this is Scott Bauer from Prosper Trading Academy, and I'd really appreciate if you could comment, like, and subscribe. I'll see you again soon.